All right, let's break down Amgen's latest earnings report. The biopharma giant just dropped its Q4 numbers and gave us a look at what they're expecting for 2026. So we're going to dive right into the key takeaways for investors.
So the big question on everyone's mind was pretty simple. Did Amgen keep the momentum going? After the run the stock has had, investors were watching very, very closely to see if that growth story was still intact. Let's see what the numbers have to say.
And the answer? Oh, yeah. It was a clear yes. Amgen didn't just squeak by expectations for the fourth quarter. They blew right past them. This wasn't a close call. This was a really solid beat across the board. What's really telling is just how big that earnings beat was. This number, the non-GAAP EPS, is basically their adjusted earnings per share. It shows you the core profitability. Wall Street was looking for around $4.73. Amgen came in at $5.29. That's almost a 12% upside surprise, which points to some seriously impressive operational strength.
And hey, it wasn't just on the earnings line either. Revenue came in hot at nearly $9.9 billion, topping what the analysts expected by about $400 million. Management said this came from momentum across their entire portfolio, not just one or two big drugs carrying the weight. Seeing a 9% jump in revenue year over year for a company this size, that's really, really healthy. It's a clear signal that this isn't some kind of one-time fluke. It's a business that is successfully growing its top line at a very nice clip. So you see numbers like this, and you're probably thinking, the stock must have ripped higher, right? Well, yes and no. The reaction was positive, but pretty measured. We saw a small bump after hours, and then a stronger move the next day. This tells me investors liked what they saw, but they're already looking ahead, knowing the real story is about what's next. And that kind of measured reaction from the market makes a whole lot of sense when you really dig into Amgen's story right now. It's basically a tale of two parts. You've got this incredibly powerful cash-generating core business, and then you have this massive potential upside from their drug pipeline. First up, let's talk about that cash engine because, wow, we're talking 14 different drugs that are blockbusters, meaning they each sell over $1 billion. 13 of those are growing at a double-digit pace. And just look at Rapatha, up 36% to over $3 billion. All of this generates a ton of cash, $8.1 billion in free cash flow. That's the real money left over to fund R&D, buy back stock, and drive future growth. Okay, so that's the rock-solid foundation. But the part that has Wall Street really leaning in, the part that could be the real game changer, it's all about one drug, their new, highly anticipated obesity treatment, MariTide. This is the big innovation catalyst everyone's watching. So, you've got this massive, and I mean massive, obesity market with giants like Eli Lilly and Novo Nordisk. So how do you even compete? Well, Amgen's playing it smart. Instead of just trying to deliver more weight loss, their angle is all about convenience. Early data suggests MariTide could be a monthly or maybe even a quarterly injection. For patients, that could be a total game changer for sticking with the treatment long term. And listen, it's not just us saying this is a big deal. Reuters literally called MariTide a paradigm-changing opportunity, and it's precisely because of that less frequent dosing. In a market that's going to be worth tens and tens of billions of dollars, making the treatment that much easier for patients could be huge. Okay, so just to recap, we've got a killer core business and this massive potential catalyst in the pipeline. So what does management see for the year ahead? Let's dig into the official guidance and see how the stock has been doing. Their 2026 forecast looks really solid. And what I like here is that it feels achievable. This isn't some pie-in-the-sky number. It provides a really credible floor for the stock and keeps that story of steady, reliable growth going, especially when you add in up to $3 billion in share buybacks. And if you want to see what this story looks like in chart form, here it is. Just look at this outperformance. Over the past year, Amgen's up over 22%. That's not just beating the S&P 500, it's absolutely crushing the broader healthcare sector. It shows you that investors are already buying into this story of execution and future potential. All right, let's put it all together. What's our final take here at the next call? Where does Amgen go from here, and what should you be watching as we head toward the next earnings report? So if you're an Amgen investor, here are the 3 things you absolutely need to keep on your radar for 2026. First, and this is by far the biggest one, any news at all on MariTide. Clinical updates are the #1 driver for this stock. Second, are they hitting their numbers? Is management executing on the guidance they just gave us? And third,
Can that core business keep up its impressive growth?
So here's how we build our investment thesis. Step 1, you have that super strong core business, an absolute cash engine. Step 2, MariTide isn't just another drug. It's a differentiated catalyst with a unique angle. Step 3, the guidance they gave us is reasonable. It provides a solid floor. You put all that together, for us, that's an outperform rating.
So, what does outperform mean in terms of a number? We see a clear path for the stock to continue to do well, and we're setting a near-term price target of $375. But, and I can't stress this enough, this all hinges on good news from that MariTide program. That's the key. All eyes are on that pipeline. And as always, just a quick reminder, this is not financial advice.